All right, let's talk about planning for retirement. It can feel like you're building this big, beautiful bridge to your future. But what happens if there's a gap? That tricky stretch of years between when you stop working and when your pension or Social Security finally kicks in. Well, today, we're going to look at a very specific financial tool designed to build a rock-solid bridge right over that income gap.
So let's just cut to the chase. Do you need a reliable, guaranteed income for, say, the next 5 or 10 years? I mean, a paycheck you can absolutely count on, no matter what. If you're not in your head right now, then you're definitely going to want to stick around for this.
Okay, so first up, let's talk about bridging that income gap. What does that even mean?
Picture this, right? You've done it. You've hit your retirement date. You're so ready to hang it up. But wait, your Social Security, your pension, that's not starting for another few years. That space in between, that's what we call the income gap. And for a lot of people, that's a huge source of stress, a real worry.
So, how do you get from A to B? From that last day at the office to your first pension check without losing sleep over it? You need a bridge, a guaranteed income bridge.
And the tool that builds this bridge is called a fixed-period annuity. Honestly, the idea is super simple. You give an insurance company a lump sum of money, and in return, they give you guaranteed payments for a specific number of years, a number that you choose. It's really that predictable.
So let's be really clear about this. This is not some complicated do-it-all retirement plan. No. Think of it exactly like we've been saying. It's a purpose-built financial bridge. It has one job and one job only, to get you safely across that income gap with a steady, reliable paycheck. Okay, so what makes this bridge so strong? Why would you even choose this route? Let's break down the key benefits. Benefit number 1, and this is the big one, guaranteed predictability. I mean, in a world where the market is a total roller coaster, this thing is the exact opposite. Your payments, they're calculated up front, they're locked in, and they do not budge. The stock market could be going haywire, and your check stays the same. You know exactly what's coming in and when.
And wow, look at the difference. It's night and day, right? On one side, you have that annuity payment, just a straight, steady, predictable line. And on the other, well, that's the stock market, a crazy, jagged line of ups and downs. Now, if you're someone who just needs to know for sure that the bills are getting paid in those first few years of retirement, that stability is, frankly, priceless.
All right, benefit number 2 is all about family protection. A lot of people worry about annuities. They think, hey, what if I pass away early? Does the insurance company just keep all my money? Well, with a fixed-period annuity, the answer is a hard no. The payments are guaranteed for the entire term, period. It doesn't matter if you're there to collect them or not.
So let's say you set up a 10-year plan. If you were to pass away in year 3, your family, your beneficiary, simply gets those same checks for the next 7 years. It's that simple. The money isn't lost. It goes exactly where you wanted it to go.
And the third big benefit? Let's just call it financial discipline. You know how it is. If you suddenly get a large chunk of cash, maybe from a settlement or an inheritance, it can be really tempting to just go wild with it. Well, this tool puts the brakes on that. It takes that lump sum that could vanish in a flash and turns it into a steady, disciplined income stream. It kind of forces you to be smart with it.
But, okay, it's not all sunshine and roses. No financial product is perfect for everyone, right? So, to be fair, we have to look at the downsides. Time for a few important reality checks. And here are the trade-offs, laid out plain and simple. Yeah, you get that awesome predictability, but on the flip side, those payments stop. When the term is over, it's over. And here's the other biggie, inflation. That fixed payment you get is worth less and less each year because it doesn't keep up with the rising cost of, well, everything.
So this all begs a really important question, doesn't it? Before you go all in on building this particular bridge, shouldn't you look at some other blueprints? Let's compare it to a couple of other options out there.
First up, there's something called a multi-year guaranteed annuity, or MYGA for short. Now think of this one less as a bridge and more like a high-yield savings account that's been hitting the gym. It earns a guaranteed interest rate, and you can usually pull out about 10% a year. But here is the absolute key difference. At the end of the term, you get your original money back. With the fixed-period annuity we've been talking about, the account is empty at the end. It's all been paid out.
Okay, but what if your biggest fear isn't just bridging a 5-year gap? What if it's the fear of outliving your money, period? For that problem, you need a different tool.
It's called a Guaranteed Lifetime Withdrawal Benefit, or GLWB. This thing is designed for one purpose, to give you a paycheck for the rest of your life. It's the total opposite of the short-term focus of our fixed-period bridge.
All right, so we've looked at the blueprints, we've checked out the competition, which brings us back to the million-dollar question. Is this bridge the right one for you to build?
So who's the perfect fit for this? Well, it's for the person who has a very clear finish line. You're not looking for income for the rest of your life. You need a reliable cash flow for a specific job, like bridging that gap to Social Security, or maybe paying off the last few years of your mortgage. And, crucially, making sure your family gets the rest of the money if you're not around is super important to you. So to help you figure this out, here's a super simple 3-point checklist for you. 1. Define your time frame. Is it 5 years, 10, or for life? 2. Think about your heirs. How critical is it that they get any leftover money? And 3. Have you actually compared the numbers? Have you looked at what a MIGA or GLWB would look like for you?
When you boil it all down, it really comes to this. A fixed-period annuity is a straightforward tool. It's designed to pay you back your own money with a little bit of interest in a series of equal, predictable payments. And for those short-term specific needs, it can be a fantastic tool.
And that leaves us with one last thing to think about. Your retirement plan is like a toolbox. You've got all these different tools for different jobs. You wouldn't use a screwdriver to hammer a nail, right? A fixed-period annuity is a very specific tool for a very specific job. So the real question you have to ask yourself is this. When you look at your own retirement plan, are you absolutely sure you're using the right tool for the right job?